Today, let's go over my $8,615 TFSA portfolio from Wealthsimple Trade and all the updates in November. Hello and welcome back to my channel where we talk about investing, personal finance, and dividends. If you're new here, consider subscribing to my channel and smashing that like button if you enjoy this type of video. Let's get started. So I started investing with Wealthsimple Trade in August, about 3 months ago. Every time I got paid, I would take care of all the expenses like Visa bill and stuff and save about $1,500. My goal is to save $1,500 consistently and invest it every month. The key thing here is consistency. It doesn't matter how much you're investing. It could be $100 per week or $200 bi-weekly. Wait, that's the same amount. I mean, you can invest as much as you want, but make it a habit of saving that amount of money and investing it regularly. I used to save and invest $500 every 2 weeks. Right now it's a little bit more because I want to hit my goal of saving $10,000 by the end of the year. I highly recommend setting up an emergency fund before you start investing heavily into the stock market. Your emergency fund should be money that should cover your expenses for 2 to 3 months. You can use this money in case of an emergency. Anytime you take money out of this emergency fund, you should always focus on replenishing it before you start investing it somewhere else. If you're new to investing in the stock market, I suggest you start off with your TFSA account. The money invested in your TFSA account will grow tax-free. You won't have to pay tax on any money that you make from this account, which makes it a great starting point for new investors. When you're investing with your TFSA account, just make sure you're not investing in foreign stocks that pay you dividends, because any money that you make from a foreign stocks in terms of dividends, you have to pay foreign withholding tax. Instead, you should aim to invest in stocks that are traded on the TSX or foreign growth stocks that do not pay dividends. I currently own 26 different stocks in my portfolio and I try to evenly distribute my money every time I deposit more into my account. Unless I see a buying opportunity for one of my holdings, then I would buy more into that stock and try to balance things out the next time I invest more money. In the past month, I bought some ETFs trying to increase my holdings in the ETFs. I also bought into CloudMD. I bought into CloudMD at $2.94 and my bad luck, it started dropping as soon as I bought it. And it's sitting at $2.17 right now. I usually invest into well-known dividend stocks, but I wanted to take a small risk and buy a small portion of my portfolio into CloudMD. Nothing has changed fundamentally since it started dropping. I still believe in the company and I'm gonna hold on to it for a long period of time. And I believe telemedicine could be a future for all of us. Since the news about the vaccine coming out, telemedicine stocks took a hit and other stocks went up. Stonks, am I right? I also saw a buying opportunity for Ryokan, so I bought more shares of Ryokan, making my average price $16 and I'm currently holding 65 shares. At Sunshine, the CEO of Ryokan recently released that they were going to cut their dividends by 33%, which means they're going to cut down their dividend payments from 12 cents to 8 cents. This dividend cut brings down the insanely high dividend yield of 10.81% to 5.41%. I personally think that was a good choice as they are securing themselves for 2021 and investing that money into newer projects. Any dividend yield that's more than 8% is sketchy and it's too good to be true. Change my mind. I'm probably going to be buying more into Ryokan and other similar REITs, and I want to diversify my exposure to REITs because right now Ryokan is the only REIT that I own. If the price of Ryokan goes under 17, I'm definitely going to be buying more. Most of these stocks and ETFs and REITs that I own, I've already gone through and explained why they're good in my other videos. If you're interested, I'll leave a link to those videos in the description box. You could simply pick a handful of stocks and ETFs and only invest into those. You can dollar cost average into them by investing at a constant interval into all the stocks and ETFs that you pick. Dollar cost averaging is a perfect strategy because you don't have to perfectly time the market to make profit. You casually invest regularly and over time you'll make profit. If you're investing with Wealthsimple Trade, you have the freedom to reconstruct your portfolio at any given time and there's no additional cost. There's nothing stopping you from doing that other than the fact you're making sure you're not selling your stuff at a loss. Also making sure you're not changing your portfolio too often because you'll be flagged for day trading in your TFSA account and you would have to pay some tax. November was a really good month. It was after election time where there was some certainty and vaccines getting released by Moderna and Pfizer. This made everyone take money out of the stocks that had crazy evaluations like Zoom and CloudMD and put it back into more stable, boring stocks. It didn't matter what the stock market was doing, I was investing a little every 2 weeks. The prices have gone up. I'm up $480 since I started investing. Now, I do think the market has gone up way too fast and it might drop a little this month. The news about the vaccine is good, but it's not as good as the market shows it. It's still gonna be a while until they manufacture enough vaccines for everyone and everyone gets vaccinated and things go back to normal. If there's a lockdown at some point, the market is gonna dip again. In the next couple months, if I see red on some really good stocks that I believe in, I'm gonna use that opportunity to buy more at a lower price. It's like a Black Friday sale for your investment. They'll eventually go up, and I do not plan to take the money out anytime in the near future, so I'll just invest in dividend stocks, watch them grow over time, and collect the sweet passive dividends. And if you happen to see a buying opportunity for one of your stocks, you can buy more into it and try to balance your portfolio the next time you invest. Buy it, forget it, and make money in your sleep. If you use Wealthsimple Trade and you haven't claimed your free $10 yet, you could still claim it by entering the code on the app. You'll receive $10 and I'll receive $10 as well. My portfolio is currently sitting at $8,615 and is growing every month. Last month, it grew about $218. My goal is still to hit 10K by the end of the year. And for dividends that I received with this portfolio this month, on November 2nd, TD Toronto Dominion Bank paid me $1.58 for holding 2 shares. On November 6th, REI RioCan paid me $2.52 for holding 21 shares. On November 9th, VAB Vanguard Aggregate Bond ETF paid me 22 cents for holding 2 shares. VRE Vanguard's REIT ETF paid me $1.01 for holding 11 shares. VDY, which is Vanguard's High Dividend Yield ETF, paid me 68 cents for holding 8 shares. On November 13th, PZA Pizza paid me $1.25 for holding 25 shares. On November 26th, BMO Bank of Montreal paid me $1.06 for holding 1 share. On November 30th, XDiv iShares MSCI Canadian Quality Dividend ETF paid me $1.40 for holding 18 shares. XRE, which is iShares REIT ETF, paid me 94 cents for holding 18 shares. CDZ, which is iShares Canadian Dividend Aristocrat ETF, paid me $1.12 for holding 14 shares. XBB, which is iShares Canadian Unity Bond ETF, paid me 21 cents for holding 3 shares. FIE, which is iShares Monthly Dividend ETF, paid me $2.44 for holding 61 shares. And XEI, which is iShares High Dividend Yield ETF, paid me $1.43 for holding 19 shares. Whew, that was a lot. I have received $15.86 in total for this month, and it's a little bit more than last month, which was $13.15. This is a good sign because it shows that my portfolio is growing over time. I'm going to be reinvesting the dividends I receive and continuously invest $1,500 every month. My dividend payout amount should keep increasing every month as I invest more and more into my portfolio. And eventually, maybe I can live off my dividends and I don't have to work anymore. That's the end goal of having financial independence and retiring early. That's been my Wealthsimple Trade portfolio and my November update. I like this type of video where I can show you guys an example of dividend investing and show you my progress. And you guys can see the results of the strategy and see that it's actually working and check if it's suitable for you. As always, make your money work for you, not the other way around. You could check out Wealthsimple Trade and start investing today. I have another video that walks you through the setup. I'll leave a referral link in the description box below. If you use that link to sign up, fund your account $100 and buy some stocks with that, you'll receive $10 and I'll receive $10 as well. Let's take personal finance into our own hands and make our money work for us. If you enjoyed this video, be sure to smash that like button and hit that subscribe button for more content like this. Bye!